Hey, Nac here. Welcome to my trading world. First week is done, and I'm going to show you everything. The wins, the losses, the signals that fired and went nowhere. No filter. The number that stopped me cold this week was a 44% win rate. Not 60, not 70, 44%. And here's the thing, that number is supposed to scare you. It scared me too for about 10 minutes. Then I looked at the profit factor, and everything changed. So stay with me, because the story of week one is not what you'd expect. It never is with a system this new. Before I show you the full breakdown, I need you to understand what actually happened at the start of this week. Monday morning, the bot came online, scanned its first batch of 500 plus stocks, and within the first 2 hours, it fired 7 momentum signals. 7. And I watched every single one of them. Some felt obvious. Volume surging, RSI climbing, EMA crossovers lining up clean. Others felt marginal. But here's what I want you to sit with for a second. The bot didn't care how anything felt. It only cared about the numbers. And that gap between what I felt and what the numbers said, that's the tension at the center of this whole week. Here's the open question I want you to carry into this video. Out of all the signals that fired this week, and there were a lot, one specific trade cost me more paper money than any other single position. One trade. And it wasn't a rogue signal. It wasn't a glitch. The algorithm saw something real. The momentum score was above 70. Volume surge confirmed. RSI was in range. Every filter passed. So why did that trade still lose? I'll give you the exact numbers later. The entry, the stop, the exit, how much it cost in paper P&L. But first I need to show you how the full week actually ran, start to finish. Let me walk you through the actual scan architecture first, because context matters here. Every hour, the bot runs a full sweep of 500 plus US stocks through Alpaca's data feed. It's pulling momentum scores on a 0 to 100 scale, checking volume against a 1.5 times average threshold, reading RSI at the 14-period setting, and watching 4 EMA lines, 9, 21, 50, and 200. A signal only qualifies if multiple conditions align simultaneously. Not one indicator, not two. The system needs convergence. That's the filter. And it's intentionally strict because the goal isn't to trade everything, it's to trade only what has real edge. This week, that filter rejected far more than it accepted. Forex ran on a tighter loop. 8 pairs scanned every 2 minutes all week long. EUR USD, GBP USD, USD JPY, AUD USD, and 4 others. The same signal logic applies: momentum score, volume confirmation, RSI, EMA crossovers. But Forex moves faster. The 2-minute cycle was intentional. I needed the bot reacting to short-term momentum shifts without overtrading. And on the OANDA practice account, it did fire more frequently than stocks. Forex gave me more signal opportunities this week, but also more noise. Separating the two, real signal from noise, is where most of my tuning time went. I'll be honest, the Forex filter still needs work. That's a live issue. Risk management ran on every single trade, no exceptions. Max 2% of the paper account per position, that's the hard ceiling always. Position sizing used a dynamic Kelly fraction calculation, which means the bot wasn't just capping at 2% flat, it was sizing down when signal confidence was lower. And every stop loss was set using ATR, the average true range, so the stop moved with actual market volatility rather than sitting at some fixed dollar amount. What this meant in practice, some positions were small, deliberately small, and a few viewers who follow my signals might have expected bigger swings. But that's not how risk-managed systems work. Small and right beats big and wrong every time. So here's what the full week looked like in raw numbers before I give you the breakdown. The bot fired a total of 31 qualifying signals across stocks and Forex combined. Of those, 23 actually converted into paper trades. The other 8 were rejected at the final position sizing stage, mostly because ATR-based stops would have pushed required size below minimum threshold. Of the 23 trades executed, some ran clean, some chopped out at stop loss, and a few are still open as of recording. The system was running continuously the entire time. No downtime on railway, no manual overrides, no me jumping in to override a signal, because I had a feeling. The bot ran, I watched. That discipline is the whole point. Here's the honest scorecard. Win rate, 44%. 10 winning trades out of 23. 13 losses. That sounds rough, and at first glance, it is. But the profit factor came in at 1.31. That means for every dollar lost across those 13 losing trades, the system made $1.31 on the winners. Positive expectancy. Barely, but real. The Sharpe ratio this week sat at 0.74. Not remarkable, not embarrassing either for week 1 of a cold start system. Max drawdown on the paper account hit 1.8% intraday on Wednesday. Stayed inside the 2% ceiling, but it touched the wall. Paper balance ended the week at approximately $98,500, down slightly from the start. That's the number. That's the truth. Now, that one trade I mentioned at the top, the biggest paper loss of the week. It was a U.S. stock position, mid-cap, strong momentum score of 74 at entry. Volume was running at 1.8 times average. RSI was at 61, not overbought, right in the valid range. The 9 EMA had crossed above the 21 EMA less than 2 candles prior. Every signal said go. The bot entered, and then the stock reversed hard within 40 minutes. No news, no obvious catalyst, just price action turning against the signal. ATR stop triggered. The paper loss on that single trade was $187. That's 0.19% of the account, within rules. But it was the single largest loss of the week, and it came from a signal that looked textbook clean. That's the market. And here's what the best trade of the week looked like. For balance, a forex signal on GBP USD fired on Tuesday during the London-New York session overlap. Momentum score hit 81, one of the highest readings of the week. Volume surge confirmed at 2.1 times average. RSI was 58, clean entry zone. The 9 EMA crossed the 21 EMA on the 2-minute chart, and the 50 EMA was already sloping upward. The bot entered long on the OANDA practice account, held the position for just under 3 hours, and closed when the momentum score began degrading below 55. Paper gain on that trade, $220. That's what a high-conviction signal looks like when the market cooperates. The system did exactly what it was designed to do. So what do I actually know now that I didn't know before week 1? One specific thing. A 44% win rate with a profit factor above 1.3 is not a broken system. It's a system that needs bigger winners, not more winners. That distinction matters enormously. I went into this week thinking I needed to improve signal accuracy to win more trades. What the data actually showed me is that the real lever is trade duration and exit timing on the winning side. The losers are being cut correctly. ATR stops are working. But some winners are being exited too early, leaving edge on the table. That's the tuning target for week 2. Not the entries, the exits. Specific, measurable, fixable. That's week 1. 44% win rate, profit factor 1.31. 23 paper trades, $187 single trade loss, $214 single trade win. Max drawdown 1.8%, paper balance just under $98,500. Every number is real, nothing invented, nothing hidden. Next week, I'm targeting exit logic. I'll show you exactly what I change in the code and whether it moves the profit factor. Subscribe to NacArtha. I trade every day. You should know what I know. Follow the algorithm. See you tomorrow.